As we jump into the SP 500 and the Nasdaq 100, we need to talk about what happened on the day. We had that clear rejection near the beginning of the trading day, pushing us back down, but obviously we are bouncing. What was said and what is given the notion in the market from a few of the Fed members. We got to talk about all of this so you are prepared going into next week. Now, before we get into this, I have to ask you to consider doing two things: liking and subscribing. Every single day I make videos for you, and I'm telling you exactly what I'm trading and how I am doing it. As well, if you are interested, the Discord link is down below. But I do a lot of free information here on the channel as well, and you can check out the Twitter, which we'll go into that here in a second. But today, the big winners was obviously the QQQ puts, and we're doing extremely well here in the Discord. So this is what we're going to be doing. We're going to be going over the Qs, some news surrounding this also. Now, I do want to talk about where we are here on the chart, and I'm going to cover this pretty in depth. But what I want to do is go over some of the news that was announced on the day. If you don't know, a few Fed members did speak. The biggest one, in my opinion, was Fed Collins. And essentially what they're doing and the questions that are being asked to these policymakers and, Fed members is smaller rates coming. That's the biggest statement. You can read this whole thing. It'll be down below if you want to see a link. It's also on my Twitter. You can go check it out. However, in my opinion, they're trying to twist their words and push them to saying are, lower rate hikes coming. And they are going to come. They're going to come to the market whether we like it or not. However, that doesn't change the viewpoint of what they're doing. And that's the very influential part here, is that they're not trying to over tighten, but they've realized that they may have to slow down with the high rate hikes. However, the ceiling for those is not yet established, and it all comes back down to data. So they never said that they were going to change it. However, maybe they've insinuated it or something along those lines. And in my opinion, that's when we continue to see these types of bounces. That's just my personal opinion. Now, we saw a few things being announced on the day, and I post all this news on Twitter so you can see it. Bank of America, as the Federal Reserve remains firmly hawkish, so even Bank of America can acknowledge that they're not changing their stance with the Fed. The Fed is very clear. Investors are fleeing to safety of cash funds at the fastest rate since coronavirus pandemic. Okay, that was earlier in the day. Going into this also, posted on Twitter where we were at. I was expecting a rejection. You can see later on, posted the wins here. And then as you can see, we obviously dumped. This is all free. This is all on Twitter. I don't make anyone pay or anything like that. So it's all there for everyone. But I do want to highlight the news that's being established here, and what's really happening on the market is that you're seeing a battle with the Fed. You're seeing Fed members sticking to their guns and telling you what's going to happen, and then reporters and the media trying to push this thesis of a pivot. Now, the biggest thing and what I could recommend for you to do, this is not financial advice, but I think this is just, common sense. What the Fed has told us is that they're going to make their rate decision, that they could still have a 75 BPS hike going into December. They're making their decision based on what? Based on data. So we have job numbers released today. We need to see higher unemployment, and we're just not seeing it. That's just the fact of it, okay? We need unemployment to rise. We need jobs to cool off, and then we'll start to see the effects of inflation start to take, root, and for good things to happen down the road. You need pain in the market before you can get to that good, healthy spot. They've already addressed this. They've already talked to us all about this. The best thing that I can equate this to is labor pains of the market. Okay, in order for us to get back to a healthy economy, we're going to have to go through pain. And right now, we have not. That's just the fact of the matter. I also do want to go into the overall viewpoint of oil. Oil is going crazy today. This is interesting. I want to, prepare and warn people also here, though. I am very bullish on oil, but you need to take into account today was their last scheduled release of strategic reserves, but we've heard this same sob story from Biden. If oil companies don't play ball and do exactly what he wants to do, then guess what? He's going to keep doing it, diluting the market, diluting the price of oil, specifically US-based oil, okay? We're only hurting ourselves in the long run. This is only hurting us. This is not hurting anyone else. This is only hurting our economy and what we're doing with our reserves, okay? We need to understand that as we go deeper into this. And I have people commenting down below that are mad and saying that Tyler is a capitalist and he just doesn't care about anyone. No, this is just the facts of it. This is just an educated channel to where I try to give you unbiased viewpoints, right? Whether you want to hear it or you don't, I'm going to tell you. I don't care if you unsubscribe or get off my channel. I don't care. When you come to my channel, you know you are getting the whole truth and nothing but, and I'm giving you my unbiased opinion. Now, when we're going forward, what we're looking at, I want to address my positions before we begin to these charts. I did buy Disney calls going into next week. I have no puts right now. I ended up closing my puts for around pretty good gains. I'm not gonna brag, but we have pretty good gains on those Q puts. I do have calls on Disney. I'm not necessarily bullish on the market. I just don't think Disney is going to get torched, and I don't think we're going to start dropping below these lower levels we have down here. I just don't see that happening. So this is a decent position to, hedge myself, if you will. I don't see the downside coming tomorrow or Monday morning either. It's worth mentioning if you go here, and we're just going to quickly look at the opens indicator, and I'm going to show you the Qs and SPY. And if we come back, we can really look at what's happened. Now, this is Monday morning, right when the green line starts. This past Monday was one of our first red Mondays, right? You opened up down and then you quickly bounced back up, to 281. Okay. Before that, a green day. Before that, another green day. Before that, a little bit of downside, pop back up, almost break even on the day flat. So I just want to highlight where you've been before that, really green day. Before that, green day. Okay, so I just want to highlight this is how you've moved. Very often you've been green on Mondays, and I'm not a tinfoil hat guy. I'm not conspiracy there. So we just had, historically speaking, good Mondays. Okay, and that's just how we've been trading. Now, going into this, where we're at with NQ and how we're moving along the way. I wanted to post this chart specifically because this is the one that I shared on my Twitter, and I wanted to show you what I was looking at. These were your previous lows you had established back in October 21st, and I was watching this specifically. You'll notice me here speaking on the channel that I'm always looking at previous lows and previous highs because those are major resistance and supports you need to be watching, okay? And when we're looking here, this is something anyone and everyone could have done. So we're looking at this level, and then we were also looking at the supply we had up here, and we saw that we rejected out of the supply, and we wanted to see how we reacted to that previous low. Rejected 1, 2, 3 times on the 1 hour chart, and then obviously dumped right back down to around the 10.7 area, and then we held that area. Back and forth, we've kind of gone all day. I do want to address the volume here. The going thing that I want to highlight when it comes to the volume and how we're trading right now, you're getting decent volume. The volume on the day, it's not horrendous. If we go into Yahoo Finance, you can look at this for yourself. It's the easiest way to look at volume. This is how I recommend doing it. TOS has some pretty good indicators as well, but looking at SPY, this is just the simplest, easiest way to look at it. Historical data on the day, 89 million. You have a little bit more in there in the after hours, so it's not bad. I think average 30-day volume is around 100 million, so you're about 10 million off, but still not a bad day. I want to address the volume is fluctuating back and forth. So if we come in here to Bookmap, I want to address how you're moving. This is one of those days you're just like, what is going on, right? So basically market open, you drop down, pop up, drop down, pop up near the end of the day. I want to address the volume coming in here is split in both directions, even with CVD. You can see the green right here. We go from green to extremely red on volume to back to extremely green near the end of the day. This is telling you that buyers and sellers are equally pushing in and pushing out of the market. There's no clear direction or follow through with those buyers and sellers. What I will highlight to you is the dark pool information, and we can see what's kicking in here, right? You can see you are seeing a lot of buying coming into the end of the week. Now, is that equating back to getting historically green Mondays? I don't know. I'm not going to be the judge of that, but I'm just sharing with you what I'm seeing, and I do like that overall, which led me into buying Disney calls. I didn't want to buy calls on the market. I'd rather just buy calls on something that has earnings going into Wednesday. I'm not going to hold through those earnings, but it's also a company I think will be and has upside potential. I think Disney is one of the best long-term companies. I'm not going to lie to you right now. You already know my opinion on that overall sector. I think Google and I think Disney are shaped up to dominate television in general. More on that later, but that's my opinion there. So as we look at this, going into Monday morning, there's a few areas we need to look at. I don't think you're necessarily bullish here yet. I do want to address that really quick before we go any further. I think where you have to get is back above this level here on NQ. A little bit cleaner of a chart here. You need to get back above around 11,000 flat. That's where you got to get on NQ. If you can get back above this, obviously we need to retest June lows, but getting back above June lows is very big also. So NQ, you need to see this. I will address this before we go any further also. If you look at what's happening on the market, NQ can very close, very, very close on the daily chart. If you look here, to all-time lows. Your 52-week lows, very, very close. And if you broke those 52-week lows, immediate target was 10.3, and then obviously down, to COVID highs, pre-COVID highs, right? That's what we're looking at, but we never got that break on the day. If you look at the comparison to ES, look at how much more you're holding up, okay? Look at, Dow. All these things, the writing on the wall, what's happening here. These are holding up extremely well. Almost just looks like a bull flag there. So I do want to highlight that tech overall, if you're looking for downside potential, I think you have to be, betting against tech. If we look at the broad scale market, they're getting hammered. And I do want that to be just known when you come here on the channel. If you're looking at downside, tech is your best friend. If you're looking at upside, industrials, those are your best bet. Industrials and oil has been the winner chicken dinner, if you will. Not necessarily oil as a commodity, but I'd be looking at oil companies, Exxon, Oxy, etc. Those are the really strong movers as we speak and as we continue to go here. So when we look, I do want to address, you did not make or even retest 52-week lows here on the day. You are bouncing, but look how much further you're very close to that region. ES, you still have a long way to go. You probably have 75% of the way to go still. From this move, right? So you need to understand where we're at and how we're moving. Now, when we look here, even on the S&P, I want to address where you're at, okay? I want to address how you're moving. Looking at Apple, you're not necessarily at your 52-week lows, but you tested, local lows here on the day, 134. You got to push down. So even the tech companies within SPY are really getting hammered, right? So you need to understand what's moving and what's kind of holding this market together. Microsoft, right, made a new 52-week low on the day, 213. You're bouncing back up to 221. This is interesting behavior here. If you're looking at the market, also, you need to understand where the strong parts are. I would argue the strongest part of the market is semiconductors right now. Reason being is, one, you have Biden pushing this CHIPS bill, everything in between with that. Step two is semiconductors, in my opinion, are one of the hardest hit sectors on the year. You've went from highs of around 335 of November last year to right now, 12 months, you're down at 141. You got to lows of 110 on NVIDIA. Going into AMD, this is the stronger sector right now. AMD is holding down, still at these lows, 62 with highs of, 164, which is just showing you the value you're getting. But I want to address, I believe these have room towards the upside. If you start to get a bounce in the market, you have to look at semiconductors to get that bounce. That's my personal opinion and how I see us moving, just going forward. If you are looking for that upside potential, semiconductors, Disney, oil and gas, and then I'd have to say industrials as far as Boeing, Lockheed Martin, RTX, Caterpillar, those names out there. That's what I'd be looking at for that upside potential. If you're looking to hedge for yourself, there's the things I would be looking at. Now, going into next week, moving through this, there's some big question marks we need to talk about. One, VIX. VIX is interesting. And I do want to say, when you're looking at VIX, I believe something's brewing here. We're back down in that region. We've been talking about this $24, $25 level for some time, and you're back there. We finally got back in our zone. This is where we've seen some of the biggest reactions, the biggest bump ups on VIX is in this $24 region. So I have to look at this. And this is, again, the reason why I didn't go, heavy into calls or anything over the weekend, right? I'm still net bearish on the overall market. Okay, I need everyone to understand that. I still expect downside broad scale market. But I am respecting what's happening with the Fed and this just nonsense agenda that they're pushing. And then going into Monday, I think I can maybe get better entries. Maybe I'm being greedy, okay? Maybe I am. But as I'm looking at this, I am watching and waiting on VIX because VIX in this region has set up for some moves. I'm talking some of the biggest downside moves we've seen across the market. As we dip into something like, the yields, look in here, 10-year yield, we talked about this, higher lows, continue pushing up, holding 4% like a champ. 30-year, it's lagging a little bit in comparison to 10-year. 10-year is going to invert pretty soon. I went over this yesterday also, so I do want people to understand, make sure you're here. You're getting a little bit of a push down here, but you're still holding and making those higher lows here for the past 2 years roughly. The only reason why I believe we did not get a major, just RKO on the market has to come down to DXY. And I don't like looking at DXY on these short-term charts, but look what's happening. You broke your top line. You made it a support. You bounced overnight, and then boom, you reject. You're kind of rejecting here again. DXY took a major slide here. Now, we understand some of the manipulation, some of the big sell-offs that's happening on the dollar and countries attacking it. Now, I've saw no reports on that today. This all just came out with the job numbers and things that were established from that. I do want it to be known, though, the fact that the dollar was dropping like this and the market was not bouncing with a little bit more conviction tells me a lot. I mean, the fact that you were still able to get downside from basically 9 a.m. to roughly power hour tells me, that the market was really weak, even without the dollar pushing to the upside, which is a pattern that we've seen here over the past few weeks. So there's a lot of telltale signs here and things I'll be looking for. But for the upside, you need to see a mount of 11,000, in my opinion. You got to get above 11,000 on NQ. That's the big thing here. Till then, NQ is extremely weak. ES, I mean, I believe you're getting there already. You're not that far off. You really haven't retraced that much here on the 4 hour. This just look like a pullback at this point. Until you really start breaking down, making lower lows here, I wouldn't be that concerned. Even on the day you made higher lows on ES. In comparison, NQ did not. NQ pushed down even further. So you need to understand the difference here also between these indexes. Going into the last, thing I want to talk about here on ES is the daily candle. You're engulfing yesterday's candle. This is bullish. This is a great end-of-day candle when it comes to futures. So keep your head on a swivel. Don't go into the market on Monday thinking we have to drop. Okay? It's okay to have that logic of looking at the market where I expect downside, but don't go into thinking X, Y, and Z has to happen. Okay? If we look at some of the writing on the walls, ES and Dow still look strong. Nasdaq does look weak. I mean, you had a decent bounce back candle here, but it still looks weak. Okay. So just understand what's happening here on the market, what's holding us up. And the big factors are going to kick in here over the next few weeks. We need to be watching for CPI and any inflation data. Okay. Jobs, inflation data. All you need to be watching right now, because that data is going to depict that next meeting. And I'm telling you right now, if that data continues with the same story, I expect, the same rate hike. I don't expect a different thesis here. Powell doesn't care about overhiking. Elections, they're done next week. So this is turning into a perfect storm when we're looking at VIX and all these other indicators out there right now. So right now, game plan. I'm going to try to ride these Disneys, make a few bucks. No, it's like more of a little day trade, swing trade going into Monday. But we're setting up, we're ready to strike once these elections pass by, because we've already been confirmed from Powell. Nothing's changed. We're very bearish. They're hawkish. They see the downside. Now we just need to wait for these elections to cruise over, and I believe things could get extremely, extremely ugly.